Okay, ma'am.
Are you understanding? And
Yes.
and drawing against profit is drawing against profit means whatever the business has earned profit, out of that profit partners are taking some amount for their personal use. They will use that amount for personal, but they will repay that amount unless and until they are again repaying that amount into the business. They are going to pay interest on drawing. Okay, both are different concept. So you should be very clear while reading the question, whether the question says drawing against capital or normal drawing means the partners are taking money out of the profit earned by the business for personal use, and their intention is not to withdraw. They will again, whenever they have that money, they will invest it back into the business. Are you understanding? So both are different
Okay, ma'am. But
concept,
in
dear.
working capital, will record all interest on drawing, interest on capital, will record everything in that.
Yes, but additional introducing additional capital or withdrawing capital will go in the fixed capital accounts. Okay, so
Okay, ma'am. They have
yeah,
given three examples in fixed capital accounts, ma'am,
yeah,
in this
yeah.
book.
In fact,
In that, they have given interest on capital also
interest
in
on
same fixed account.
in fixed capital they have given interest on capital.
Yes, ma'am. Interest on capital they have given. Percent also they have given.
Are you sure, dear? Because 101%
I will send you the pic of the question
yeah,
to you, ma'am,
definitely
to your
send me.
email.
Yeah, send me. Because interest on capital, if it's a fixed capital, it will go in current account. It won't come in this fixed capital account. I don't know why they have given.
I'll send you, ma'am.
Yeah, no issues, dear. You send me.
And I've solved all the three, ma'am.
Hmm.
But I've solved using this, including this fixed capital. I mean, interest on capital.
Okay, but in your school already this chapter done, finished.
They have done totally. It has 92 sums, ma'am.
Okay.
They have done 12 sums in class, and they have given rest of them as homework.
So out of that 12, this question comes like you're saying interest on capital included in fixed capital. It is
No,
there.
ma'am. This is homework sum.
Okay, you can ask your teacher 101%. I am sure, as per my knowledge and my concept, because there is no chance to come in fixed capital. If it's a fluctuating, everything will come there. But when we are talking about fixed, only four things will go. First, opening balance, which we will write on the credit side by balance BD, because it's a liability. Then the closing balance, that will come in the debit side to balance CD. Then any either of two items or both, if as in question given, like additional capital introduced or withdrawal capital. If additional capital introduced, it will again come in the credit side. It is increasing the liability, right? And
Yes, ma'am.
suppose withdrawal of capital, then it will come in the debit side of the fixed capital account. It is just decreasing the capital. We are taking back. We are means I am talking about the partners. They are taking back. So I don't know.
I've sent the question
Yeah,
to WhatsApp, ma'am.
yeah,
I
I
can
will.
check it.
Yeah, I will see it here. Just
Ma'am, notes for this lesson didn't send, ma'am, the PDF which you share usually.
yeah, I have sent you na.
For this partnership lesson, ma'am.
Yeah, PDF is there, dear. Fundamental. See, you just check the PDF.
Ma'am, it's there.
Yeah, it's
I
there.
got
Yeah. Just a moment. Mm. You're talking about which question, dear? Question number 22. Which
ma'am,
question?
at 20, 21, 23, or 22. All these three questions.
Okay, I will see first 22. What is
I've solved all the three, ma'am. I've got that.
Yeah,
That's it.
just a moment. Simran and Reema are partners sharing profit and the ratio 3 is to 2. Their capitals as on 1st April 2025 are okay. Opening capitals given, whereas current account balance is also given separately. Okay, that you will write in current account. Interest on capital is to be allowed 5% per annum. net profit for the pass the journal entries for allowing interest on capital and distribution of profit. Also prepare profit and loss appropriation account. Okay. No, dear. See, you have mistaken. See.
Yes, ma'am.
Okay, just no, you didn't understand. Actually, see, you have to calculate interest on capital. Okay, you didn't understood, you misunderstood the concept. See, they are asking you to allow interest on capital, how much? 5%, and two balances are given here. First, fixed capital account balance and current balance. Whenever in a question two balances are given, that is fixed capital account balance and current account balance, the concept says always you have to calculate interest on capital on fixed capital. Okay, first concept, whenever two balances are given, if only one balance is given, there is no question of confusion, right? But when two balances are given in a question, you have to calculate interest on capital on fixed capital. And that is why they are saying interest will not be allowed on current account balances. Means two balances are given na, opening balance, current account balance, whatever is given, in that interest will not be calculated. It will be calculated on what? Fixed capital. And total interest of both the partners, whatever, Simran and Rima, when you calculate, you will get total interest on capital 20,000. That you will show in the PL appropriation account debit side. And this 20,000, where you will show in the current account of Rima and Simran, whatever name of the partners are given, where you will prepare partners current account. And in which side you will show? You will show in the credit side. Okay, that's why I thought concept, my god, 101% I'm sure. Actually you are new now, so you misunderstood. Okay, now it's clear to you.
Yeah, ma'am. I think when you teach the concept, I'll understand.
That's why, dear, we will do from the beginning. Okay, no hurry. As usual, we will be no in rush. You don't have any problem now if we go slowly.
No problem.
Yeah, because no need to rush. Your school will rush you. It will finish everything, but you will understand nothing. So no issues. Now we will do from beginning. I will teach you. You are having the notes, everything now. Yeah, you just start writing, I will start explaining. Just that's why, see, without that concept you have misunderstood. That's the reason I was shocked how this came. Fine. Okay,
Thinking about this.
what, dear?
I was breaking my head thinking about this all this time.
Okay, issues. Just a moment, I will take first my notes. And I have guaranteed your mother that I don't know about school exam, ma'am, because I will never rush. Whenever I teach students, I will go slowly only. But before boards, I will do 2 to 3 revisions. She will finish everything and definitely she will score excellent marks. Okay. So you have to, what you have to do?
I have to make sure that words come true.
Yes, that's what. Okay. This time, last year 5 students studied with me this online tuition, class 12th I am talking. All were from different schools. Okay. And all were like, when they joined my tuition, they were just how to pass, and that way they came. They were weak in accounts and they did so well, in boards. One of the girls, she belongs from Sikkim. She scored 88 out of 100 in accounts. And when her accounts teacher, school teacher, I'm talking about school teacher, he said she knows nothing, she is going to fail, she will get only 20 out of 80, she is going to score only 20 in her boards, 12th board, CBSE. Her mother was so worried. Immediately she called me, sir is saying like this, like that. I said, just forget everything. In school whatever they are saying, you don't listen. 100% she will score above 80 in accounts. Still till now she is not practicing. I will make her practice, don't worry. Then I explained her everything. Then before boards, 2 3 months before, she started practicing. Like 12 o'clock, 1 o'clock, she used to send me the notes and everything, every question, and she scored 88 out of 100. And not only that, overall percentage was 91, and she was the topper in her school. If you want, I can send her photo also. Like that, miracles happen, and if we work hard, anything we can achieve. Everything depends on our hard work. The more effort we put, definitely. Throughout the year, her mother was so worried because in school exam she used to leave 20 marks, 25 marks. She used to get scolding from me also. Why you're leaving this, ma'am? I couldn't write, I couldn't get the time, I didn't understand, every sort of thing. But finally she did it. She proved, and other students also scored good marks, like 64, 75, 84, 80, and this girl 88. So no worries, okay? School exam whatever you are getting, 45, 50, 55 out of 80, I am talking. No worries, in boards definitely you will rock, and you are sincere, I know. And your mother trusts you. You're very sincere and very that much dedicated to your studies. No worries, okay? All the best, dear.
Mm.
Yeah.
Thank you.
Yeah, dear. So you have taken notes?
I started writing.
What, dear?
I started writing.
Yeah, fine. So, Section 4 of Indian Partnership Act 1932 says it defines partnership. Partnership is the relationship between person who have agreed to share the profit of the business carried on by all, or any of them acting for all. Now, what is the meaning of this? What is the meaning of partnership business? First, see, in class 11th you must have studied sole proprietorship. In that there is only one owner. There is only one owner, and what he does, he just runs the business. Whatever profit he is earning, he enjoys alone, and whatever loss he suffers, that also he bears alone, because there is no other person to share the profit or loss, since he is the only owner, single owner, sole proprietor. Now in class 12th we are going to study about partnership. Partnership means in a business there will be more than one owner, partners. In order to start a partnership business, minimum there should be 2 partners and maximum 50. Now, what is this partnership they are saying in Indian Partnership Act 1932 Section 4? They are defining about this partnership. They are saying that it is the relationship between the partners. Partners may be 2, 4, 5, 6, up to 50, any number of partners. Now they have agreed to enter into a partnership. There are chances, for example, if there are 4 partners, now they agreed that they are going to start a partnership business. Now what happens after that? Out of the 4, suppose there are chances that 2 partners will run the business. Run the business means they will work hard, they will do all the business activity, they will purchase goods, then they will sell to customers, they will do everything. And all the 4 partners, they have invested capital, because without investing capital, business cannot be started. So each of the partner has invested some amount of capital into the business. Now what is going to happen? The other 2, there are chances, they may say that since we are working in some office or whatever, so full-time job we can't do, like once for a while we can come and we can help you, but if you expect that entire work like you we have to do, it's not possible. Before entering into the partnership, I am saying all these agreements they are talking about, but they have invested capital. Now what will happen? Okay, the other 2 partners will say no issue, since you have invested capital, we will look the business. So whatever the important decisions, whatever, meetings, all those, the other two, they will also be involved. But the like operating activities and all, other two will look after. Now what happening after 1 year when the business will earn profit? It is not at all possible that the other two will say to those two that you didn't help us, you didn't even come, you didn't help us in running the business, so you are not going to get any profit. No, that is what this partnership act says. Anyways, they have invested capital, so they have to get their share of profit, even though they didn't help in running the business activities. So this is only partnership act, means even if three partners are not running the business, they have invested capital, they have every rights, they have a right to take part in management decision, they also have a right to have a share in profit. Others cannot deny. Even if one is running, he can't say I am alone working hard and all, because capital is invested by other three. So this is the meaning of this line. Any of them acting for all. Meaning of this line. Business either four of them, they will join together, they will work hard, or possible any one is acting on behalf of other three. Understood, Swarnika?
Though one is working, if they have contributed their capital in that, every profit belongs to everyone.
Of course, that's why it is not possible that the other who is working alone, he can't deny, he can't say no, you didn't work anything, how I will give you share in profit, this is my hard work result, I will enjoy the entire. That is what the Partnership Act has a rule. Even if the three part out of four I am talking, just an example, if four partners have entered into partnership, one is working, other three they are not working, but they have invested capital, so they have the right to have share in net profit. He can't say the one who is working that I will not give you the profit. That is the meaning of this line. Any of them acting for all, or the business carried on by all. Very, very important. Actually, in theory also I am telling you, each and everything from your book you have to study, dear. Because this 1 mark multiple choice question, they may ask in a twisted way. Before boards, anyways, you are going to solve the sample paper, question bank, everything you will be solving, so you will come to know. So from the beginning, put a habit when you study accounts, first read the chapter thoroughly. Don't see that it's a theory. From theory also, multiple choice they will ask. They are not going to ask you 5 or 6 mark question theoretical. But if you don't understand these concepts, that multiple choice also you can't be able to answer. Okay, you should not ignore anything. Read each and everything in depth. Okay. Yeah. Now next, minimum partners 2, maximum partners 50. So in a part, yes, yes, Vanika, tell me, dear.
That particular person who is working for the company, apart from the other partners, he can demand for the last share of profit, right, ma'am? Because he worked in spite of others.
No, that also I will teach you. Actually, I will know everything. There is a rule. Suppose they have an written agreement. Okay, written. Actually, partnership business can be started either by oral agreement among the partners or written agreement, but it is always preferable to start the partnership business in written agreement, so that to avoid the disputes, any disputes among the partners in future, in order to avoid those, it is preferable. So what happens, suppose the partners have a written agreement, then they will get the share of profit or interest on capital as per their agreement in written form, as you told. But in absence of that deed or partnership agreement, there are certain rules, okay, which we are going to learn everything. Okay.
Okay.
Yeah. So now minimum partners 2, maximum partners 50. In a partnership business, minimum 2, maximum 50. Now who has decided this number of members in a partnership? Companies Act 2013. So this type of like 1 marks question chances are there, they may ask you. So if you go through the theory, then only you can just answer correctly. So Companies Act 2013 defines members in a partnership act. Minimum should be 2, maximum should be 50. Now next, Partnership Act 1932 has some important rules which needs to be followed. Okay. Now terms and conditions. Partnership deed. Now what is this partnership deed? Partnership deed means it is a written agreement among the partners before starting partnership business. Now in that agreement, what information is there? All the partners before starting the business, they will decide who will get how much profit, what in what ratio. So profit sharing ratio will be mentioned. Salary, like suppose some partner may ask that I will work overtime, so I want salary. If the other partners agree, then that partner may get salary. So that should be written form, in written form. Suppose reserve, if the partners they have decided to create any reserve out of the profit, then how much percent, that everything should be mentioned in that partnership deed. Interest on capital 5%, 10%, whatever. Interest on drawings, the percentage. Drawings, how much amount of drawing each partner will withdraw monthly or quarterly or yearly or halfly, whatever. So each and everything should be mentioned in partnership deed. That is only terms and conditions. I hope you are writing there. Are you writing everything?
Sure.
Yeah, fine. Now these should be there. That is only partnership deed, written agreement between the partners before starting partnership business. Suppose, extremely important, this sixth one, this will help you a lot in solving the practical questions. So rules applicable in absence of partnership deed. All these like profit, salary, reserve, interest on capital, interest on drawing, all I said, this the partner will decide and they will have in written form, written agreement. That is partnership deed. Suppose they don't prepare any written agreement. Suppose there are 4 partners or 2 partners, they decided orally, they talked with each other orally how much profit they should get, how much interest on capital they will get. All these oral discussion is going on before starting the business. They don't have any written agreement and they started the business. Suppose this is the case, then this rules 100% applies, because Partnership Act 1932 says all these rules which should be followed. When these rules are followed, when there is no partnership deed between the partners. And don't worry, this when you will be solving the practical questions, clearly they will mention that there is no partnership deed among the partners. Or if there is partnership deed, that also they will mention in practical questions. Partnership deed provides the following. When you read the question carefully and when you come to know there is partnership deed, then forget about these rules. Whatever partnership deed is saying, that percentage or that amount, you can do it. But when you read the question and you find the question says there is no partnership deed, in absence of partnership deed, and they are giving some salary, bonus, commission to partners, interest on capital, their own some percentage is given, you have to ignore all those things and these rules are applicable. So extremely important. Yes, you want to ask something?
I cannot hear your voice properly. Can I rejoin the link?
Yeah, rejoin it, dear, rejoin it.
Mom?
Yes, dear. Now my
No,
voice is audible to you?
yes.
Okay, fine. Just a moment. So now what are these rules? Extremely important, dear. You must know these rules thoroughly. These rules are applicable in absence of partnership deed. If partnership deed is there, no need to use these rules. Then as per the question, whatever the question says, you have to do. But in absence of partnership deed, all these rules are applicable. Now what is the first rule? Profits and losses to be shared equally. Suppose there is no partnership deed, and without partnership deed, orally the partners have agreed in some ratio. For example, 3 is to 2 is to 1. For example, there are 3 partners A, B, C, and they have decided to share their future profit or losses in 3 is to 2 is to 1. For example, but they have decided all these orally. They don't have any written agreement. So after starting the business, once the profit is earned in the business, the rules applies. What the rule says? No. No 3 is to 2 is to 1. No. That will not be provided. Now how the profit will be distributed? Equally. 1 is to 1 is to 1. So even in question, if you see that in absence of partnership deed, the ratio is given 3 is to 2 is to 1, or whatever the ratio is given in your question, you have to you don't have to share the profit in that ratio. Equally, the partners, they will be sharing profit or losses equally, not in that ratio. Understood the first rule?
Mom, once again,
Yeah, I am waiting.
once again, can you explain?
Yeah, I can explain, dear. See, suppose when you do, or when you do the practical questions and you read, the question says there is no partnership deed. So you understood, okay. Immediately it should come to your mind, there are certain rules which we have to follow. And suppose there are 2 partners, A and B. Now they have agreed into orally, they have agreement oral before starting the business. Once they started the business and once they earned the profit, suppose the profit is 1 lakh rupees, for example. Now the partners decided to share the profit in 3 is to 2. Orally, no written agreement, no partnership deed. Then they can't share that 1 lakh profit in 3 is to 2. Why? Because the rule applies. Whenever there is no partnership deed, this rule needs to be applied. What the rule says, in absence of partnership deed, profit or losses should be shared equally. So 1 lakh, it will not be distributed among A and B in 3 is to 2. It will be distributed among A and B in what ratio? 50,000, 50,000, equal ratio, 1 is to 1. If 3 partners, 1 is to 1 is to 1. 4 partners, 1 is to 1 is to 1 is to 1. So equally, whatever profit or loss will be shared, not in their agreed ratio orally. Now you got it?
Okay, ma'am. Though they have decided to share in a particular ratio, they will be shared equally only.
Yes, they have to share. They don't have any options. Rules are applicable. They have to do in this way only. Because Partnership Act says 1932, in absence of partnership deed, this should be distributed in equal ratio, not in their own orally decided ratio. Now, yeah, very important. Now the second, what is the second rule? No interest on capital will be provided. Suppose there is no partnership deed, no interest on capital will be provided. Now what is the meaning of this rule? Suppose A and B, 2 partners, they have decided to start partnership business orally, not in written agreement, no partnership deed, and they entered, they have started the business. After orally, they have said that 5% interest on capital each one of us will get. Suppose A has invested 1 lakh, B has invested 50,000 in the business. The end of the year, they will be getting on 1 lakh 5%, on 50,000 5%. All these are done orally, no written agreement. Now what the partnership says? No interest on capital will be provided. They will get not a single pie as interest on capital if there is no partnership deed. So if the question tells A and B, they are starting the business without partnership deed or in absence of partnership deed, whatever, by reading the language you can understand, in absence of partnership deed. And the question says that A and B will get interest on capital 5%, 10%, whatever. Immediately you have to write no interest on capital will be provided to A and B as there is no partnership deed. They have decided orally, but the rule is applicable here. In absence of partnership deed, these rules we have to follow, not the oral agreement made by the partners. Is it clear to you, Swarnika?
Yes, ma'am.
Yeah. Write it down everything, okay? Some additional, whatever I am saying, in your own words, if you write, it will benefit you. Now the third. No interest on drawing will be charged. Again, the same example we will take. Two partners A, B. They have decided to start a business. Partnership only we are talking. And both of them entered into partnership orally. No partnership deed. No written agreement. In such a case, orally they have decided that each one of them, A and B, they will pay interest on drawing 5%. For example, like whatever amount they are withdrawing from business for personal use, out of the profit, they have to pay to business how much interest? 5%. Now after entering into the business, what is going to happen? Since they didn't enter into any written agreement, the rules are applicable. Whatever amount they are withdrawing from the business for personal use, business cannot charge any interest on drawing. Business cannot ask any person. So they no need to pay any interest on drawing to the business. Like they are not going to get any interest on capital from the business. Same way, they are not going to pay any interest on drawing to the business. Understood?
Oh,
Yeah. Now, no salary, bonus, commission will be provided. Suppose any partner says I have to get 1000 per month salary, or some says bonus, commission I have to get, you have to give me. No, because there is no partnership agreement, no partnership deed in written form. All they are talking in oral only. So partnership rules are applicable. In such a case, no interest on capital, no interest on drawing, no salary, no bonus, no commission, nothing they will get. So it's very, very important to enter the partnership business always in written form, written agreement. Now, this point is clear to you, dear? Yes, Varnika, this is clear to you?
ma'am.
Yeah.
Yes, ma'am, it is clear.
Okay, dear. So whenever you read the question, be careful. First, always in this first chapter I am talking. Whenever you read the question, you have to first identify whether there is partnership deed or not, because all these rules automatically it will apply in absence of partnership deed. But in order to make you confused, they won't give directly. By reading the question, first you have to understand deed is there or not. Once you identify that deed is not there, they will say A will get salary this. So if you're not alert, if you don't focus on question, the students will do this type of mistakes without reading that particular line. In absence of partnership deed, whatever the question says, they will provide everything, entire question will go wrong. That's the reason in accounts you have to focus on question, the language you have to understand, each and every word you have to read carefully before solving it. So when you come to know there is no deed, whatever they are saying to give, just ignore everything, but you have to write a note. No interest on capital will be provided since there is no partnership deed, and Indian Partnership Act 1932 applies. In this way you have to write clearly. Okay?
Okay, ma'am.
Yeah. Now, extremely important point, this interest on loan to be provided at the rate of 6% per annum. Now, what is the meaning of this? What happens sometimes, the partners, they give loan to the business. Partners are different and business is different. So partners are the owners of the business, and we prepare book of accounts or all the accounts from business point of view, not from owner's point of view. Now suppose partners have given any loan to the business, in balance sheet liability side we will see that loan, because business needs to repay that amount of loan to the partner along with interest. So now what this rule says, if there is no partnership deed, then interest on loan should be provided, should be given by the business to the partners 6% per annum. So we have to focus on the date when the partner has given loan. It will be given in your question when the loan has been given by the partner to the business, and as per the date we will calculate this 6% per annum. For 1 year 6%, so for 6 months means you can do 3%, or you can calculate 6% and just make it for 6 months, like that you can solve it. So the main thing is that in absence of partnership deed, suppose any partner has given any amount of loan to the business, business will pay 6% per annum interest on that loan to the partner. Very, very important, because while when you will start doing the question, you will find in questions that they will say there is no partnership deed and the partner has given some amount of loan on a particular date to the business. Partner is demanding 10% interest on loan, or 7%, 8%, whatever. But you should not give that, you should not calculate that. You should read the question and you should write a note. Since there is no partnership deed, so Partnership Act 1932 applies, which says that in absence of this deed, business should provide interest 6% on loan given by the partner to the firm. Clearly you have to mention this. So this is very, very extremely important. You will find in many places in this fundamental partnership. So this rule applies a lot. So extremely important rules here. Whenever there is no partnership deed, profit or loss, it will be shared equally among the partners. No interest on capital will be provided. No interest on drawing will be charged. No salary, bonus, commission, nothing. And this interest on loan, 6% will be provided by the business to the partners. Any doubt dear in this particular thing? You are having any doubt? Yes, Swarnika, can you hear me? You are having any doubt dear? Okay. Now next, partnership accounting. Partnership accounting means in this partnership, what are the different accounts we are going to prepare? First, PL appropriation account. We are going to learn how to prepare PL appropriation account and what we are going to do. See, PL appropriation account is always prepared in order to distribute the profit among the partners. Now, what is the meaning of this? See, in sole proprietorship in class 11th, there is only one person. So, no need to prepare any separate account to distribute that profit, because he is alone going to enjoy that profit. He is going to take the entire profit home and enjoy. The same rule applies for losses also. But when we are doing this partnership accounting, there will be more than two partners. Okay. So in all, whatever the business has earned profit, that needs to be distributed among the among the partners. That is the reason we prepare a separate account known as PL appropriation account. Here you are not going to prepare any PL account. In 12th already they will give you the net profit which we got by preparing the PL account, trading PL, all those things. So from net profit you have to take that net profit in this PL appropriation account credit side and distribute among the partners. For that we are going to prepare. Then partners capital account, partners current account and balance sheet. All these things we are going to learn how to do. And this main features of partnership rights, all these are theory. Already I have given in that, so you just go through it. The previous video recordings I have sent you. Okay.
Okay.
No need to waste in this theory. All are theory, but go through it, because this will be asked in your exam in this theoretical part, like 1 marks to. Don't ignore anything. Read each and everything from your book as well as this PDF. Now directly I will come to, you can come to page number 7, dear. You have taken page number 7. Yeah. So in this page number, just a moment. Before that, any important thing if I left, I have to teach you in theory also. Just a moment. PL appropriation. Yeah, no. Okay, fine. Now you can prepare the format for this PL appropriation account. It's just a nominal account. Now what is the meaning of nominal account? Just like PL account. All the expenses, all the losses you have to write in the debit side of this account. All the income, all the gains of the business, we will be writing in the credit side. So debit, credit, two sides, particular amount. Now by PL account you will write on the credit side, because the net profit we have to transfer from PL account to PL appropriation account. If there is net loss, then you have to write in the debit side of PL appropriation account. To PL account, in bracket you can write net loss. In case of profit, credit side. In case of loss, debit side. In question you will be given whether loss or profit. Accordingly you will transfer it in the PL appropriation account. Now out of this net profit, only you are going to give the items to the partners. Suppose there is partnership deed and the partnership deed says to give interest on capital. Suppose there are 3 partners ABC. Accordingly you will calculate in working notes and you will give whatever the question says. Calculation you will do in working notes, then you will write here A is capital account, B is capital account, C is capital account, whatever you got, that interest on capital. Since it is an expense, interest on capital means what? Whatever the capital is invested by the business, on that particular capital, business is going to pay interest. And we are preparing this from business point of view. And it is business account. So you have to think in this way. For business, whatever the expenses, we will write here. Expenses paid to the partner. Again, in PL appropriation account, only those expenses come which the business pays to the partners. Rest of the expenses will go in PL account. Only those which we are going to pay out of the profit to partners. You can write it down. Expenses means which expenses? There are many business expenses. The business expenses will never come here. Out of the net profit, whatever we are going to pay to the partners, that will come here in the debit side. So interest on capital, suppose paid to the partner by the business, that will come here. It is an expense for the business. Suppose any salary, bonus, commission, it will be given in your question. So that you have to pay to partner out of this net profit, that is also expense. We have to show here in the debit side. Suppose A, B, C, whatever salary, bonus, commission they are getting, you have to show it is an expense for the business. Out of the profit only these things we are going to pay. Then any reserve created, that will also be given in your question, like create 10% reserve out of the net profit or divisible profit or whatever, everything, different variety of question. It's a very big chapter, lengthy chapter. Different variety of question you will get, different concept you have to learn. So all these you have to do. After that, interest on drawing. Interest on drawing is income for the business. For any business, interest on drawing is always the income. So it will come in the credit side of PL appropriation account, because partners pays interest on drawing to the business. It is income. That is why it comes in the credit side. Suppose ABC 3 partners, whatever interest on drawing they are paying to the business, you have to show in the credit side. After that, very simple, you have to see, you have to do the total, that is the casting of debit side and credit side. Suppose credit side is more than debit side, it means what? It is a profit. So in the debit side you will write 2 divisible profit. Transfer to A is capital account, B is capital account, C is capital account. Depends how many partners. 2 partners means only A and B. 3 partners means A, B, C. That's all. If debit side is more than credit side means loss, Then in the credit side you will write, what you will write in the credit side? By loss transferred to A's capital account, B's capital account, C's in the given ratio. Till here any doubt, dear? Swanika, any doubt you are having till here?
Till here it's fine.
Yes, dear?
Till here it's fine.
Okay, fine. You wrote everything till here?
I've written.
Okay. Now partners capital account. Very, very important again. What is the format for this partners capital account? Debit, credit. Okay. Now always remember this PL appropriation account and partners capital account are just opposite. Now what is the meaning of just reverse or opposite? See, just in a very simple way, try to understand. If you understand this small concept, any difficult question you can solve. Very important concept. Whatever the business pays to the partner, again I am repeating, whatever the business pays to the partner, those are the income for the partner. Okay, so it will come in the credit side of the partner's capital account. So all the expenses of, very simple, all the expenses of the business are income for the partner. If anything partner pays to the business, then for partner it is expense, for business it is income. So it goes in this way, like whatever the business pays to the partner, it is income for the partner, expense for the business. In the same way, whatever the partner pays, like what the partner will pay to the business? Interest on drawing. Interest on drawing always the partner pays to the business. So it is expense for the partner, income for the business. So in PL appropriation account, whatever you see in the credit side, that comes in the debit side of the partner's capital account. And in PL appropriation account, whatever you see in the debit side, that comes in the credit side of partner's capital account. Why? Because in PL appropriation account debit side, those items you will see which the business pays to the partner, expense, that is income for the partner. So in partner's capital account, in the credit side, what you write? Whatever the the partner gets from the business, it increases their capital. For example, if any partner is getting any salary from the business, any bonus, any commission from the business, that increases their capital. That is why we write in the credit side. Suppose any interest on capital partners get from the business, that is income. So whatever income for the business, that increases their capital. You have to show in the credit side of capital account. Net profit, which not net profit, sorry, net profit we get from PL account and we transfer in PL appropriation account. Out of that we have to pay the salary, bonus, commission, interest on capital, all. Then whatever left out, that is divisible profit. So that divisible profit again the partners get from the business, you have to show in the credit side of partners capital account. Suppose any divisible loss, that you have to show in the debit side of partners capital account. Because if there is any loss in the business will ask from the partners. Remember, these are the small things which the students don't understand and get confused. If there is loss in business, who is going to bear the loss? Partner. Bear means they have to bring from their home and compensate that loss to the business. So their capital account will be debited. If they get profit, then it will increase their capital account. You have to show in the credit side. Any doubt in this PL appropriation account and partners capital account? How they go in reverse way? You are clear how they are moving in reverse way?
Yes, ma'am.
Yeah. Now page number 9. Capital accounts. Okay. Now capital accounts are mainly of two types. There are two types of capital accounts. One is fluctuating capital account. Other one is fixed capital account. Now in fluctuating capital account, we prepare only one partner's capital account. You can write all these partner's capital account format. I will say like by balance BD. Suppose there are three partners A, B, C. So by balance BD, it will come in the credit side, opening balance. Then suppose any additional capital brought by any partner or all, then the journal entry will be cash account debit to A's capital. Suppose A is bringing any additional capital. In this way, B, C the same. So additional capital will increase their capital. You have to write in the credit side by bank account. In bracket, you can write additional capital, whoever is bringing. By interest on capital, suppose all the partners, they get interest on capital, then again it will increase their capital. So interest on capital account debit to what? This partner's capital account you have to show here. Then suppose any salary, bonus, commission any partner is getting, that will increase their capital. Again it will come in the credit side. By PL appropriation account, any profit, divisible profit, that will increase their capital. So we have to write on the credit side. In debit side of partner's capital account, what items will come? Suppose as I told you, drawings are of two types: drawing against capital, drawing against net profit. Suppose any partner is withdrawing the capital, then here what will be the journal entry? Suppose A is withdrawing. A is capital account debit to cash. Okay, so in the debit side you have to write to cash or bank, withdrawal of capital. It will reduce their capital. Drawings will also reduce their capital. They are taking cash from the business for personal use. It will reduce their capital only. Now to interest on drawings, whatever amount they have taken, now they have to pay interest on that drawing to the business. From where they will pay? From their capital account only they are going to make the payment. Again it will reduce their capital. So on the debit side it will come. That's all. Then as usual you have to just make the sum total of debit and credit side, and you will write to balance CD, closing capital, that is it will come here, whatever the balancing figure. So partners capital account is clear, the format and everything? Yeah. Now we will move to this capital. So as I told you, two type of capitals are there: fluctuating, fixed, and very easy to identify while doing the practical question. If it is fixed capital, they will mention fixed capital account of A, B, C, balances, whatever. If it is not fixed capital, the word fixed will not come. Simple, they will talk about capital balances or capital account. So you have to understand it is fluctuating. In this way you can understand by reading the question. If it is a fluctuating capital, very easy, only one capital account like this, partners capital account, this is only fluctuating. Everything will come here, by balance BD, to balance CD, and all whatever they are getting you will write in the credit side. Whatever partners are paying to the business you will write in the debit. Simply you can easily do this. So credit means plus, debit means minus. If a question is silent, assume capital to be fluctuating. Prepare one capital account. As I told you, if you read the question is silent, they don't say whether it's fixed or fluctuating. Always you have to assume fluctuating. You have to prepare just one partner's capital account like this, and you have to put everything here and just close the account. Now suppose it's a fixed. In question definitely they will give fixed capital of A, B, C, or fixed capital of A and B, amounts, everything they will give. So in that case two accounts you have to prepare. One capital account, another current account. Partners capital, partners current. So now if capital is fixed, capital account, what will come? As I told you, only four items will come: debit, credit, two sides, particular rupees, particular rupees. Fixed capital, the balances will be given in your question. Fixed capital of A, B. How many partners? First you have to read the question. Two partners means amount column you have to divide into two parts. Three partners means into three parts you will divide the amount column. Both the sides, debit side and credit side of partners capital account, both in current and fixed. Now by balance BD, as in question you will get, you can write it down. Then suppose any additional capital introduced. By reading the question you can understand. Then it will come in the credit side of fixed capital account. Any capital withdrawn, as I told you, drawing against capital, or directly also they will write capital withdrawn by the partners. So you can understand to bank and you will write whatever the amount given. That's all. Nothing will come. Only these 4 items to balance CD. The balancing figure will come. Any doubt on this, dear?
No, ma'am. Till now it's clear.
Okay. Now the current account. So current account, rest of the things, everything, whatever the same, like rest of the things, there are many things. Na? And current account balance also, sometime they may give you, sometime they may not give. If they are not given, no need to panic. If they have not given, just leave it. Other things you can write. If they have given like opening balance of current account A and B, you can write it down by balance BD. Suppose two partners A and B, whatever given in question, you can write down. Not given, leave it. No need to panic. And very important concept, please kindly write in your notebook now itself. Interest on capital is always calculated on fixed capital. Students get confused when two balances are given, fixed capital and current capital balance. Sometimes they calculate on current. Question will go wrong because this is a rule. Always you have to calculate interest on capital on fixed balance, not on current balance. So write it down. You also misunderstood now because you don't know that. That's the reason. Write it down clearly. Now, yeah. Now, whatever like interest on capital, salary, bonus, commission, whatever the partners, any one or all of them are getting, you have to credit their current account with the amount. Suppose drawing interest on drawing partners are paying to the business, that will reduce their capital. So in the debit side of current account, you can write all those. Very simple concept, partners capital account. Whatever the partners getting from the business, it will increase their capital, show it in the credit side. Whatever partners are paying to the business, it will reduce their capital. From capital only they are going to pay to the business. In capital account only the business will pay to the partners. So this is very important concept. So you have to do accordingly. Any doubt on this, dear?
No, ma'am.
Okay. In next class we will start this topic. It is extremely important, like charge against profit versus appropriation out of profit. Extremely important, this topic. So in the next class I will clear all this concept, then we will move to questions. Okay. Now you can solve those 3 questions on that in this fixed capital fluctuating. Now I hope the concept is clear to you, right? You can just redo all the questions and see whether it's coming or not. Are you able to do it? Okay.
Yes, ma'am.
Yeah. Thank you, dear. Just send me the notes. Yeah. Yeah. Thank you, dear. Bye.